Good morning, traders. This is Perry Wilkie with StartupTrading.com. It is 3 minutes till 9 a.m. Eastern Time on Monday, February 24th. So let's look at the news ahead for the week. Really, most of the news is back-ended as far as what we expect for major news. We have preliminary GDP on Thursday uh, and core PCE on Friday, with just ahead of those two things, NVIDIA after the bell on Wednesday. Those are your big ticket items for the week. Uh, so there was actually even nothing scheduled for today. So let's look back at Friday. So Friday we basically went from 540 in the Qs down to 526, and then for the S&P 500, the SPX, the cash market, basically went from 6125 down to you know 6,012 ish, 6,008 and a half basically is where we went to floor at. And if you notice, we went on the SPY, right, from just above 610 down to 600. So, there was your 100 points down in the ES, just that SPY move down. Looking at what Friday's session did to structure, you have four sets of signal prints and everything except for the Dow, which has three. They all have the XS and A lines that we'll have to watch, and I'll leave them on there until they trade later this week uh, to see if we get back up there or not. But normally, when you have this much damage to one side or the other, like in this case, it would be the damage to the bull side. Um, it takes at least four sessions to get back up to where this XS and A line would be, like for the Nasdaq and the ES. Doesn't mean it's going to be the case this time, but that's the average of what you see. We might trade these lower blocks. We might even get, today or tomorrow, we might even get up into these top pink boxes. But getting on the other side of these top pink boxes uh, before probably Nvidia comes out on Wednesday night is probably, not a shot that you want to be shooting for unless price action is really, confirming something that way. Uh, Normally, what we'd have after a move like this is we would have at least a day of balance, right? We have to see if we have acceptance down here or not. And then we could very easily balance down here for, Monday, Tuesday, and Wednesday, in my opinion. We'll see. I'm sure we'll get some lows tested at some point in time, potentially, and then, see if we go back up. Looking at positioning, and we do have some pretty good markers for the week. We'll have to see as this changes out as we trade through the week. But right now, the Qs are trading at 529. You can see for the week, we got, what should be the floor, and it doesn't mean that we're going to trade down to the floor, but we got 65,000 contracts on the put side at 520. That should be your floor area. And if if you're looking at today, you can see that at 515 there's only 13,000. So you'd have to get past this 520. That should be a major support resistance line. In this case, since we're above it, it should be support. And then, of course, you'd have to get through 525. And then, getting back above 530 would be a little bit more steady for the bulls, and we'll see if that is even on the table today, but that would be about another 40 points up from where we're currently trading. So you're looking, I would round it off to like 21,835, right around in there. 830, 835 is right around where this will line up. I'll post that on my 8 grid this morning after we get going. um, but that's your first major support resistance line uh, above as well, is right there, and we're only 40 points from it. So technically I could see us, we traded down to 526, actually 525.50 on Friday. We could retest this area at least between 527 and 530. That'll be a 120 point range. See if we can break through either side. um, Looking back at the SPY now, you can see for the week, 595 is going to be your major support. You have 150,000 contracts basically sitting at 595. That would be basically $4.50 on the SPY lower than we traded Friday. So that'd be about another 45 points, 40 to 45 points lower than we traded on Friday to get down there. That's your major marker. And then 600 is what we were really flagging around yesterday. We're currently trading 603. So as we retest 600, that's going to be your bogey line. But you can see that for today, and for this week so far, there's not a lot. I mean, it's not like it's minimal, but there's 60,000 contracts there, and like I said, there's 150 sitting on 595. And then as if we're able to hold the 600, for today, you can see 610 would be your cap, and probably right around 607 is where you're going to really start, 607, 608 is where you'd really start to, put pressure on the bears, for positioning today. Uh, but likely, that's where, you would get some even sided trading. We'll see if we can even get up to there. So looking at the cash market, if you look at this is just a freaking mess for the SP. X on the cash. So the cash closed at 60.13. We're up 30 points, so let's just round it. That we'd be opening right around 60.50. If we're to open right now, you can see that there's some good amount of gamma for Monday at 60.50, and then right around to 60.60, which is only about 10 points higher than we're currently trading. That's where the decision needs to be made. So we could, pretty much, make a decision between 60.50 to 60.60, and then which is basically, like I said, right where we are now to plus around 10 points. We'll get those numbers out once, the cash market opens. And you can see for the week, there is, again, this is 17,000 contracts, which isn't, horribly large for the week up there. And, 5,700 of them are up there for today. Uh, so, going back down, you can see basically 610 to 6,000 is what you're at. For 6,000, you're at 23,000 basically for the week, and for today, you only have 3,800, so it's not a lot for today. And then you can see there's quite a bit of clustering for today between 59.50 and 59.65. So, this would be what I would think for the week so far, the way we're looking at positioning. You got 60.50 to above, up to that 60.60. If you can break that, you're probably going up to the 75.80 potentially. That's would be your next little marker. But 6,100 should be, very hard to get over. If we even can get up there before Nvidia reports this week. And then to the downside, we're in negative gamma now, so that the put side is going to drive this either as short covering or as moving back around. So when we're in negative gamma, right, when the market falls, the dealers have to sell with it. When the market rises, the dealers have to buy with it. So you get whipped around a lot when you're in negative gamma. Volatility should be, increasing, although it could be a little bit muted here in the first little bit of a go. So Jack's idea of waiting until this afternoon is probably not a bad idea at all. And then you got, like I said, 59.50 has been the floor for a while, and I think you could get very quick 50-point drop sometime this week potentially, whether it's after Nvidia or not. That will test 5,900 if that does not hold in short order. I think I beat up positioning here, so let's move on. Um, Friday's point of control did, move down with the market action. So Friday's point of control is 60. 61.30 quarter is where we were, and the previous day was at 61.35, or excuse me, 61.37 quarter. So you know you've really moved on that 107 points right there. And then if you, we'll get into it on this other screen, but you can see the next stop, and we have skipped over this. This originally traded on January 8th, this 59.50 point of control. That's when it was created. We come down and tested it basically on February 3rd, and then, lifted. Uh, back up and whatnot. So basically, Friday, the close of the action on Friday was just from this February 3rd to high. That was a 61.8, basically rounding off, is what traded for the ES. And if we look at that same thing from February 3rd to high, right? That was the basically the 50 for the NQ. So I think we're at a good spot here that until we can prove that these levels can be broken, and trust me, they can be broken easily, but until they are, you shouldn't be getting ahead of yourself thinking that it's just going to be easy money to the downside, because more than likely we're going to get a retest back up to Thursday's lows at some point this week, and maybe that's where we go. uh, as we look at the overnight action, 33 and a half points for the ES, and there's 130. I'll start commenting on this. 136 and a quarter overnight for the NQ. So not a lot of movement right there, and you can see what a mess this structure is overnight. And you can see the Dow. Remember, it only put in the 3 sets. It's already traded back up to almost the top end of this range. So for the Dow, I mean, the Dow and the Russell are both in oversold conditions right now. It doesn't mean they can't go lower, but it means that shorts should really be tightening up their stops, because when you do move up, you could get a 1, 2, 3 days of just getting that oversold condition back out. And the deeper it goes down, the more pressure it's going to be to take that oversold condition out at some point in the future. Um, but the XS and A lines for both of those will be interesting to see if they actually can get wiped out today. I think it would be almost impossible for the Russell. I'd put it at a very low probability, like under 20%. Uh, and then for the Dow, uh, I think it probably has like a 40% shot of at least testing this level and then seeing if it wants to just fall from there again and just balance back in this area. For the Nasdaq and the ES, I think you're in a much more pressured down situation than the other two indexes. They're not oversold or close to it at this point in time, and they were overbought last week. So we've got that going on. So I do want to go over Jack, since Jack's not going to be trading until this afternoon. I do want to go over, for those of you that don't have this indicator yet, this day frame indicator. So if we look at the midpoint for Friday's trading is at 21,949 quarter. Uh, the session low so far is down here at this 21,676.75. And as we look to it, we can see that the overnight high was right at, as Jack would call it, this lower midpoint. Uh, and then we'll see if we get any. So to me, this is very clean. That it doesn't mean it's definitely a support resistance line. So obviously, if we start making progress above there, you could get up to this 21,949 half around there. That would be the midpoint from Friday, and then that would probably be. I would not want to press anything past that today. But if we look at the ES, right, it's been waffling on this lower midpoint line so far. So you can see that it has made a one up a little bit higher. Uh, and probably if you draw from this midpoint down to Friday's low, you're even a little bit higher up in the trading. But, the way that we're doing this day frame right now is this is it. So the midpoint for the ES that from Friday is 60.83 half. Uh, that should be probably, as Jack would call it, I would assume anything over these blue midpoints is definitely on a premium uh, to go, and anything that's on the new low side would be, towards that discount at this point in time, right around Friday's low. It doesn't mean we can't get deeper discounts, right? It could be a blue light special or something, but just be wary of pressing shorts down here. Probably a little bit more two-sided between this last swing low and up towards that upper midpoint. But to me, the Nasdaq looks much cleaner on this day frame indicator today. Um, we'll see what Jack's looking at this afternoon. Uh, don't get, this is one of those days where I suggest that you give it that 25 to 40 minutes to open up, kind of get a feel, because there'll probably be uh, still some bad feelings about Friday from some of the bulls. Remember, probably the majority of the market, probably 92% of the market's always long. It's just us idiots that'll short around in position, and then you got institutions that'll hedge some of their portfolio from time to time. But they can't put too much capital on the hedging, right? Because they want to get cheap hedges and take them out to something else. If they spent too much of their capital on hedges, they wouldn't make any market when they shouldn't have had the hedges on. Uh, so as we look at this, uh, since the VIX did rise on Friday, that's something else you can watch. You can draw lines for Friday's high on the VIX and the VXN. I'll throw this over here for you right now, real quick. Give you an example, but you can throw highs, that you're watching it over here. And we're looking at these two bottom on the lower left, the middle and the bottom, the VIX and the VXN. As you're coming across here, what you really want to see is draw that VIX line to get lower lows on the S&P 500. You want to see the VIX trading above this 1903 basically and holding. And the same thing for the VXN, which is the VIX for the Nasdaq. You want to see it trading above 2155 and holding if we're making new lows. If we don't do that, those lows are probably not going to hold. It doesn't mean that you should go buy with both hands, but it means you should really be tightening up your shorts and looking for signs of a bottom, like with the price structure that uh, on single prints, forming single prints, those fair value gaps. You want to see some action go in. Uh, and the volume for overnight, by the way, is not. It's a little bit higher than what we've had in the last couple sessions overnight. We have 214,000 in the ES, and we have 100,000 in the NQ overnight. So those are your markers, and that's what I'm going to be watching this morning. Uh, Keep in mind we did have those underwater trades that went off on the Nasdaq on Friday, so traders were getting ahead of themselves, and you can see that none of these indexes, well, I should say none of them. The Nasdaq did gap fill since the session opened, but the other three have not. So that would be your first marker. Remember, when you get a gap fill, that's just where the screens either go, that's where they go neutral, right? They're not red or green. That's the exact area that we settled at Friday. So you're going to get some emotional fallout if we start turning red uh, on there, and we'll have to see how much emotional capital there still is for bulls to want to dump. I don't think it's a place that true bears are going to start pressing. They want to see if the how scared the bulls are, to be honest with you, first. But my guess is we balance between now and Wednesday, like I said, and then we'll go from there. So I hope this a little bit longer. I went a little longer since Jack wasn't on this morning. Hope this helps. You guys have a great day. I'll be in the chat on and off, and we'll see what Jack's looking at this afternoon.